Hello, this is Mark Beveridge, one of the members of the Quill Group Investment Committee, here to update you today with some of the changes that are being made to the Quill and Elston portfolios, which we call the EQ series of portfolios. So these are changes that are happening which affect the four portfolios: low volatility, the diversified, which used to be called the G60, the accumulator, which used to be called the G80, and the long-term portfolio as well. So what are the changes? What's in and what's out? In the screen here we've highlighted in green the new holdings. We've highlighted in orange the holdings that we're selling out of, and in pink there is some holdings that are being reduced slightly. As you can see in brackets beside there, that's the former weighting was at 8% in the Franklin Templeton, so that'll reduce a little bit. And formerly the Henderson Tactical was at 12% in the low volatility, at 8% in the diversified, and at 8% in the accumulator, formerly the G80 portfolio. So let's go on to a little bit more detail about that. So we're removing the Henderson Tactical Income Fund. It's been held in the portfolio since inception as a fixed income manager with typically a fairly short duration and the ability to move duration around. The fund's been quite successful, but what we find is that the more successful you are, the more money people want to give you, and as the size of a fund gets much bigger, it gets to a point where outperformance becomes more difficult. The replacement fund that we're using principally is the Daintree Core Income Fund. It's managed by Mark Mitchell and Justin Tyler. And Mark Mitchell was formerly at Capstream until about 18 months ago, so he's partly responsible for their strong investment performance history. And now at this new boutique Daintree, which is also backed by Perennial Investment Management, and with a smaller amount of capital to manage, we think that they'll be able to outperform Henderson as they have in the last little while. We look at that in this chart here where we compare Daintree with Henderson. So the Daintree line is in blue there, the Henderson line in red. This is only the last 3 months of returns, so at a 0.5% return in 3 months, that's annualizing out at around 2% annually, just on the run rate of the last 2 months. And the Daintree fund has run at about 0.68, so close enough to 0.7% after fees. That's annualizing out at about 2.8%. They're not returns to get excited about, but this is the core low-risk fixed income component of the portfolio. The other replacement that's coming into the portfolio is the Ardea Real Outcome Fund. Now, this is quite differentiated from the traditional fixed income funds. In this chart here, we show the fund in that brown line there versus the Bloomberg Bond Index in the green. As you can see from August onward there, the Bloomberg AusBond Composite Index has zigzagged up and down as interest rates have sort of bounced up and down, below 1%, slightly above 1%, and so on. In contrast, the Ardea fund was able to make good gains when there was good gains to be made in bonds, but then it's held on to those gains and continued to make further gains while the traditional fixed income indexes were bouncing around there. So we think that this relative value approach to doing their trades, they buy government bonds, or they can even sell government bonds when there's an arbitrage available between the physical bond price and the matching futures and swap contract that they use to hedge that with. So there's very little credit risk, there's very little duration risk. It comes down to manager skill to make the returns, and we think that they'll be able to continue to do that and provide a good source of diversification to our portfolios away from relying on the traditional fixed interest levers of duration or credit risk. So these switches are going to be made in the 3rd week of January. So thank you for watching this little update on the latest changes to our portfolios. Of course, if you have any questions about the changes, your Quill Group advisor is always happy to provide you with any additional research, or we can even get on the phone and send you any extra information that you might need to have comfort in the decisions that we're making. Thank you for watching.